Trump indicated there will be no retaliation against Iran's latest missile attack in US base in Iraq, because there were no casualties, to be honest, in a bid, of course, to de-escalate tensions in the Middle East. Safe havens are falling, are weakening. The upside in oil was seen failing from stage one, to be honest. And now we can shift to other politics that are more likely to move the markets on an intraday basis. Yesterday, the new European Commission President visited the UK to start talks with Boris Johnson between the EU and the UK, pretty much. She said in a lecture or speech in the London School of Economics that the European Union stance is going to be more hard now. Okay, she threw into doubt the possibility of a free trade deal between the UK and the European Union, and now the pound might come under pressure until there is more clarity, at least on talks. Now, I want to talk today about the GBP New Zealand dollar, because it looks to me that there is more upside on this pair, and also on the Canadian dollar against the yen, because yen is weakening as the safe haven demand is falling. But at the same time, the Canadian dollar should also be falling because oil is falling, but remains a bit more stronger against the safe haven yen, of course. On the pound against the New Zealand, right? Let me go a little bit further out just to have a better view on what I have been seeing actually for the past few months, right? I see this as a 1 and 2, right, in the primary degree. So we ended wave 5 down there, and I'm expecting this correction to end higher. Looking at this move to the upside, it looks to me as an ABC correction, right? Which means that we're potentially going to have another complex correction over here, right? And if we take the Fibonacci extension of W and X, right, we are actually trading, bounced off, let's say, tested the 61.8 Fibonacci extension of W and X. That's why we came down over here, right? But now, seeing this bullish hidden divergence on the MACD, right? I think that with the combination, of course, of this being the 50 Fibonacci retracement, I think that we're going to move higher, right? That would validate my projection few weeks back for this being in 1, 2, 3, 4, and then a 5. I'll go down on the 2-hour chart. So we've got these potentially becoming 1, 2, 3, 4, and 5, right? With 5, if we take the Fibonacci extension of that, move to the upside, ending around the 2.083 or so, okay, 82, ending wave 5, and this would potentially be, of course, a false break above the previous high, right, which is the 2.056. And at the same time will be the end of wave C, and then we should be looking to move down in an ABC manner, corrective manner, to complete wave X. And from here we can start looking again for prices to start moving higher. Now the other pair I wanted to look for the day is the Canadian dollar against the yen. Let's go back again on the 8-hour chart to have a view of what I was expecting here as well over the past few months, right? So we're seeing this as 1, 2, 3, 4, and 5, right? Now, since this is all a corrective pattern, right, because we'll have ABC, 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 WXY over here, we can expect again that to be the same over down there. Now, the thing is, because I've pulled my Fibonacci extension over here, that really brings us close to the 84.40, right, for the end of this move to the upside, which is corrective again, right? We have wave WX, and this is wave Y. That is going to be also wave 4 in the intermediate degree. Now, we've done in the minute degree 1, 2, 3, 4, and 5 already, ABC, and now we could show duplication, or at least a 61.8 extension of this move being confirmed and validated anywhere between 84.40 and 86.30, because we could see indeed prices moving up here, creating a false break, and then start sliding to the downside, right? The thing is that we start seeing the first signs of a bearish bias here on the MACD, both on the MACD and on the RSI. Now, if we go a little bit lower down, again on the 2 hours here as well, we can see that this last move, it's a bit more complicated, right? So we've got 1, 2, 3. We could have had 4 already and 5, right? Which makes that 1, 2, 3, 4, 5, right? And then ABC, and we should be looking then to start moving lower for a correction, or you know, to start moving lower in general, although I still think that we're going to move higher to take out these levels. The other scenario would be that we have 1, 2, 3, we are still doing 4, okay? And 4 is going to be an open triangle pattern. So we've got 3, 1, A, B, C, D, and E, and then we're going to take 5 up here. Or, of course, the other scenario is that 4 ended down here, and now we're going to move again up on a 5 wave upside move to take out the 8440. So in the medium term, I would really want to see what happens between around this area to start deciding on whether this is going to move to the upside or to the downside. But the downside, we're really looking at the 8250 being the last stop for bears.